Thank you, guys. And I suppose coming last, you have the benefit of listening to everybody else. So, and I know there's a version, Carla, that the guys have, and I'll make this one available because I just literally looking at gaps, what other people have captured. And I think a lot of us, the journey is more or less the same, but it's much more Telkom's perspective. So the additional elements are more just what I felt, we needed to convey to colleagues today. And so what I'm not is, I'm not an engineer, I'm not a management accountant, I'm not in marketing because I don't have my red tie, but what I am is a storyteller, just to give you a sense of the journey so far. And I'm in the corporate affairs team, but speaking on behalf of all my colleagues. And I think for us I think we've been fortunate enough, and when I came in, I thought we were possibly the youngest company in the room, but I see Netcare was only in existence in 1996. But I think this year marks the 20th year of Vodacom operations, and I think we're fortunate enough to be the one company, including our colleagues at MTN, whose history literally talks to this burgeoning democracy. Because in essence, all of us came online in 1994, and I think we're fortunate as part of our organic history that when the IEC was looking for communication, we literally just piloted the first base stations, connected a few highways, and were able to give guys handsets. So the first democratic elections were literally powered by Vodacom. So remember that, and thanks for supporting us. But in essence, just to give you a sense, I think when you look at MTN, Vodacom, and I think our histories are relatively mirrored. So we're the dominant player in the SA environment, they're the dominant player in the continental market. But when you look at where we are, we've got about 57.5 million, and just as of June, so we've got about 59.6 million customers. So that's at June, but I think some of the stats, this was at the financial year end. And I think ours is a proudly South African company, roots in South Africa, operations in 5 other markets on the continent, the DRC, Lesotho, Mozambique, Tanzania, and the like. But I think for us is over and above the mobile network operations through Vodacom Business Africa, which is present in 16 other markets. We have presence, when you add on in over 40 countries on the continent, offering converged fixed line, services. We're majority owned by Vodafone at 65%. And I think when the transaction with the unbundling Telkom, that entire experience, I think there was a foreign direct investment that the government appreciated at the point, but Vodafone is our majority shareholder, and as part of that experience, we have benefits that include economies of scale, product innovation. So what gets tested in various other markets, we'll look into, but also we're able to push into the Vodafone universe, products and services we've tried and tested in emerging markets. And when you look at where Europe is and how Vodafone is performing, in its EU market, you see that India and South Africa are literally the biggest contributors to Vodafone revenue. So that's something that we're proud of. Just literally our history, you'll still get that. But I think key for us, and when you look at democratizing, and I think, before 1995, 1996, everybody, all of us literally were Telkom subscribers by virtue of no real opportunity, no other avenue. And I think when mobile came in, there was literally pent-up demand for voice services. And I think for us, the prepaid platform literally became the launchpad for democratizing access to voice. And I think literally as opposed to all standing in queue, and I know a lot of us, gentlemen, I think the younger gentlemen in the room understand standing in queue to call your girlfriend at a specific time. And it never really worked out, but I think mobile network liberated all of that, and I think for us, we're fortunate to be part of that. But when you look at 1995, that's when Vodacom acquired its first license in Lesotho. Thereafter, Tanzania followed, the DRC, Mozambique, and the like. But key for us was literally, I think 3G, you'll see all our rollout milestones, but I think for us was, when you look at the key ones, I think the mall that we set up was revolutionary, as opposed to, and I think elsewhere in the world, you literally get a mobile network contract with your service provider, and you go to a phone manufacturer and you get your phone, and literally it's 2 separate models. And in the S environment, we're able to still twin the 2. So in essence, which is why it's inseparable for us to not think of a mobile contract. And if you remember, the legislation back then, you had to have a mobile service provider that you were contracted with, and you still had, the network operator. So literally that's literally helped us, I think, be able to bundle some of these services and open up and make sure that guys were able to get access to the latest handsets over a 2-year contract, and we'll talk about how we make our money. But literally, and I keep saying to a lot of people, what do we do? And ours, it's literally around enabling possibilities. So you do what you want to do with your connection, whether it's family, live, work, play, that's what we do. But our core services, voice, messaging, data, available on contract on a prepaid platform. And I think for us as to who leads us, Shamil was employee number 6 of Vodacom when it started. So he's literally been with the operation well in excess of 20 years, has literally done every job you can think of. And I think the right man at the helm of the ship, and literally our executive, this is really our executive committee. And I think how we do our business, and I think, and I just literally want to give, because a lot of guys will think of us, and I think how we interact with all of you is whether you're reloading prepaid, the network connection is bad, you call the call center. And I think that's literally a lot of the interactions we have, but I just want to give you a sense of, so we get licenses allocated as spectrum band, we build networks, we use the very spectrum band that we've been given to provide voice services. Customers pay for the services, connectivity, making the call, cash flows reinvested into the business, into the network rollout, and I think generating a return to our shareholders. But I think for us is and our operation, and I'll go into the strategic priorities of our business, but we've said we will be known for the best network for smartphones, best network coverage, so we're literally investing a lot of our money. Last year alone, we invested well over 10 billion in the South African operation towards network rollout. A lot of it towards LTE, ensuring that we've got 3G, because 2G, we literally have coast-to-coast, border-to-border coverage, but literally making sure that we have data where we have voice. And I think for us is, creating value, products and service, products, services, and we try be a service provider to all South Africans, primarily across, so we've got products for bottom of the pyramid customers, and we've got high-end products for the metro citizens, the Centenites, the guys that literally have 4 or 5 devices on them at any given single point, and the guys in the townships and in the rural environment. We're seeing a lot of uptake of data usage, even though it's still quite minimal, but a lot more people, there's uptake and appreciation of what data can then do. And I think for us, we're fortunate that in the emerging markets, as opposed to elsewhere in the world, the first real experience people will have with internet is going to be over a mobile platform, because fixed line penetration hasn't really worked out. So that for us is from a sustainability perspective, we know that we'll continue to offer a service and help people realize their dreams. But this is really our financial performance in the last year. Mobile voice is still a predominant contributor. Interconnection is at 9%. Mobile messaging, as you can see, is dwindling. And that's one of the key challenges that we face as a business that I'll touch on, because the applications, over the top services, WhatsApp, Facebook, BlackBerry Messenger and all those are literally eroding, and guys are literally playing our territory. But when you look at contributions, so South Africa still remains the biggest contributor to our revenue. So one of our biggest challenges is diversifying revenue streams, making sure that we're not totally reliant. Customers, as you can see, this is where we are. This is at June. But what we literally are strategic pillars, and I think for us, and when we said and we've been working on these strategic objectives for the last 3 years, and was literally saying customers are literally core to our sustainability as a business. The key focus areas, we compare ourselves on a monthly basis against our peers in the sector, looking at Net Promoter Score. The experience customers have with us, are they likely to recommend us above all other network operators and mitigate those issues? So best value, bundle services that we've put in place, we're looking at tariff transformations. as you introduce new products and services, new technologies in your system, you're literally now, and I think our model even around the contract, because guys, the 2-year contract is literally, you're locked in, but as part of it, as we bring in new services, it's literally trying to see how we transform some of those price offerings, but also migrate guys in our legacy products into the newer ones where you're able to realize a lot more value. So you've seen a lot more of the bundled offerings, voice, data, and messaging all put in one. That's on the customer burst service. That's our biggest one. We literally utilize Touchpoint Net Promoter Score. Even when guys leave our stores, randomly we'll invite you to give us a sense of what your entire experience was. And what we want to do is make sure that each of our colleagues in the call center or in the retail environment, literally the one person you speak to addresses all your issues. If you're buying a smartphone, we'll literally have a conversation with you around what you can do with it, data bundles, what works for you, what are your consumer, so that literally the one experience talks to you. But that's an ongoing project that we have. Growth is a big priority for us. Diversifying growth data. As you can see, if we the earlier slide. So data in the last few, and this is not SMS data. This is literally guys connected to the network, downloading, interacting with the internet via that is a big driver for us. New services, M-Pesa has come through, and I think in South Africa we've just relaunched a revamped M-Pesa offering based on South African realities. And ours was, M-Pesa was an exceptional success in Kenya. Tanzania, improved it even further. And the assumption was you bring it into this environment, it would literally take off. And I think we've had our own key learnings. I think we took it for granted that the South African environment is quite mature. That the banking sector, when you look at Mzansi account, M-Pesa literally did not, wasn't able to get the traction required. So that's a big one. Internationally, we constantly focused on new emerging, operations, trying to find one. But I think today it's like trying to find a needle in a haystack, because not only has MTN done its homework, but Airtel, the real opportunities are few and far between. Where there are excessive premium, and you need to make a call as a business whether you're going to pay 3-4 times what is the company's worth, considering, because once you've done your due diligence and you realize that from a capital and investment perspective, you're literally going to have to spend 6-7 times more than it doesn't really make sense. So literally trying to find opportunity to grow is a challenge. Enterprise business for us, Vodacom Business Africa, which was launched in 2008, is a key driver for us, not only to business customers, but when you start looking at opening it up, fiber to the home, which is where the Nuotel transaction comes in. And that's part of the rationale why the business was looking at it, because they already have infrastructure in place, fiber that's already in the ground. And in the acquisition, we'd be able to compete with Telkom comprehensively as a totally converged business, as opposed to one that's still limited. So that's part of, one of the key objectives is also operational efficiency. And for us, this is where the sustainability, and I think that's when the board, the executive team never really, they brought sustainability thinking into business strategy, as opposed to seeing it as the annual reporting participation in the SRI. But it was about saying, what can we do, not only to improve efficiencies, but the cost savings. We look at the biggest consumer, our base stations network. When you look at carbon footprint, it's quite extensive. So that's where we spend a lot of focus on, and I'll touch more on that. But key to our business success on a day-to-day basis are people at the core. And for us is we operate in a very cutthroat environment, high turnover, only because there's limited skills in the engineering, management account. So literally, for you to continue to succeed, you've got to retain your best talent. So we've got programs in place to ensure that Vodacom remains an attractive environment for high, talented individuals, and that are key to sustaining our business performance. Then reputation. Key for us is not only, we've spoken about community license to operate, but for us, critically, if we're going to, if it's a beauty contest for services, for you to continue to make money, you've got to be the most recommended, the most preferred, but also be seen by your customers to be contributing to their own socioeconomic development. And I think for us, we were doing research, and when everybody associates Vodacom outside its own sphere It's literally with soccer, with rugby. But the biggest contributions we make is in education, school connectivity, teacher ICT resource centers, in health. We've got partnerships with the Department of Health. So last year alone, we spent 104 million in collaborations and partnerships with government, with communities within which we operate. And I think that, from a preference perspective, I think we're seeing customers start to identify and prefer companies that they see are having, an impact on themselves. But over and above, I think over and above our financial performance, and I think what we do, our impact comprehensively. And when you look at the 10 billion we've invested, and I think for us, that's much more from a differentiation perspective, because none of our competitors invest as much. But that talks to our network presence, which is why we remain the dominant, the market leader, only because we've got the most extensive coverage, but we invest in the latest technologies and future-proofing. Part of our the investment we're making this year is literally ensuring that our network is ready for technologies that we know will kick in 3, 4, 5 years' time, so that we don't lose the gap, and we're able to offer South Africans the latest technologies, high, faster speeds on a consistent basis. The countries within which we operate, in a lot of these, we're not only an investor, taxpayer, but when you look at the jobs created as part of being part of the value chain, we literally, in the South African market alone, I think the economic impact study we did, we're literally supporting well over 200,000 jobs indirectly, while we've got 7,000 employees directly employed by us. And that's literally supply chain and everybody else included. Investing in people, over 4 billion. When you look at our wage bill, a lot of it, training is also included in that. But when you look at and I think we keep having the same conversation with other guys, that literally as a business, you've got lenders and providers of finance that are looking for a specific return. And I think we're able to strike the right balancing act of ensuring that we've got the finance required for network rollout, still get the return in, and able to get finance in and then pay back. So we've distributed well over 13 billion. But I think for us we're more than just that. Not only do we take cognizance of our environmental impact, when you look at our radio access network renewal program, we're literally saving up to 40%, and that's where the efficiencies come in, and I think that's what we've been benefiting from in the last year. But also what we're looking at off-grid, off-grid sites, generators are being converted to reduce fuel consumption. But one of the best projects that we're doing recently is looking at community power, where we're literally talking to Eskom, the locations and rural areas where Eskom will tell you there's no way we'll be able to deliver a service to that community. So in Mfulweni, community in northern KwaZulu-Natal, right, 13 k's away from the Mozambique border, there's one such, and it's a perfect candidate location for community power. We literally put up base stations with solar panels, so we'll partner, find a central location, so schools primarily, and we literally ensure that we get more energy than is required, and then we push that back into the system, so the school is connected, the clinic is connected. And what then happens is it becomes really a community hive, where people are able to still go charge their phones, as opposed to paying 30, 40 rand to go to Richards Bay just to charge a phone and then still get back. So you're seeing some of those, but what we're seeing is from a partnership with communities, that asset is possibly the most safeguarded asset, because it's a community asset and vandalism really goes away. But I think for us, the sustainability journey, and I think ours has been much more evolutionary than revolutionary. So with listing, and I think our first report was in 2008, that's prior to our own listing. So the guys who've been on the journey a lot longer, so we've taken lessons from everybody else. But with that report in, and I think a participation in the CDP 2010, and a participation in the JSE-SRI, and I think today, I think Carla just mentioned where we rank, so I won't really make this about what we're doing right, because a lot of it goes to Trisha, my colleague, who does the real legwork of collecting all the information and chasing up everybody around targets that have been agreed year on year. So she monitors how we perform in that area. But what I try to do, and listening to everybody, was try to still keep in line with the revenue driver framework and try pull it back to where we are as a mobile network operation and how we're responding to it. So when you look at growth, the biggest one for us is diversifying, looking at opportunities. But growth for us literally goes to unlocking bottom of the pyramid, block. For a long time, prepaid has done its bit, but there's a lot of pent up demand for data services. We just have to find the right models of unlocking it. And the big prohibitive factor in that space has been the cost of handsets. And if you're not on a contract, which is subsidized and linked over 2 years, where there's a payback period, for our customers in that space, it's literally finding the right handset. The biggest challenge in talking to handset manufacturers was, can you give us a smartphone with the same color screen resolution, same functionality for under 1,000 Rand? And we've broken down that barrier now, because we're literally getting into the 700 Rand, 500 Rand category, and these are still good quality phones. But we still have to manage the customers, even in that bracket, are very aspirational. So they will still want the iPhone, they will still want the Samsung, but it's about showing what is available there to open up that. Growing enterprise, fiber to the business, so the Neotel acquisition helps us do that. Machine-to-machine technology is coming in. Cloud-based hosting is a big driver for Vodacom going forward, and our investment in the data center that we've built on campus is literally helping us to harness some of those opportunities in there. M-Pesa in South Africa, we've revamped it totally. I think when people interact with it today, it's a totally different proposition. Not only do you have the partnership with Bidvest, with Visa card, Visa card, so you're literally able to, as opposed to being limited to going to a net bank ATM to retrieve your cash, you can literally have cashless transaction utilizing your card, do the transfers, but also the uniqueness of it is we're able to convert airtime. And I think that's what our people understand the most. People are able to commoditize airtime, cash, convert it, buy your data bundles and do that. So even with the new offering, when you have airtime, you're able to convert it into M-Pesa cash and then still do a transaction as opposed to being limited to different top-ups. So that's the new innovation. So investing in networks, I'll skip this one. But I think when we start looking at operational efficiencies, what we're doing, and I think it's trying to look at customer service, the technology team, how they're managing the equipment, but by constantly tracking and putting matrix in place for improvement, call resolution. And what we said to a lot of the guys, we're having one of our biggest challenges was, even with the teams that we have in the call center, it was about minimal time on a call. And I think what we realized is then you have multiple repeat calls, same customer, same issue, we're not addressing the issue. So what we said to the guys, single call resolution. So it doesn't really matter if Tshepo spends 30, 40 minutes dealing with a specific query. But if that's done, we know it's literally not ever good, that issue is never going to come back. And we've been able to reduce volumes by just even 7%. And when you start talking, that is a better way to manage. You'd rather give more time and remove the issues. But once you've learned that lesson, we already correct all systems so we don't have customers, so we're able to intervene. Thank you. But also looking at environmental management. So that a picture of our offices in Cape Town, we've literally, that's on the roof. We've put solar panels just across. And that building, in essence, is self-provisioning. It's not on the grid. And I know Tricia is telling me that the city of Cape Town doesn't have capacity to receive what we're producing. So we're able to give it back, but we can't. So we literally are just using that power. There's an ice factory at the bottom. Literally, that helps us cool, our data center and infrastructure. So it's literally self-sufficient building. So that's one of the other issues. So across all our operating companies, there's a commitment and targets around carbon reduction, but also investing in newer and more energy efficient systems. So ultra low cost. And in essence, what I keep saying to putting up base stations is a capital intensive process. So on average, it would cost you about R1 million just to put up a base station. The payback period is quite longish, but we've been finding novel ways in areas like Lesotho in the DRC, far-flung areas, to actually reduce that cost by half. So literally for 250,000 Rand, you're able to still get a low cost because it's a sparsely populated location, but you're still able to, and the payback period is even shorter because we know what these guys want. It's still voice driven, so it's not necessarily putting infrastructure for data in the first instance, but as time goes on and there's maturity, you'll start to look at how you replace that. So solar sites in Lesotho, community power is in there. And I think when it comes to human capital management, our biggest challenge as a sector and as sector players is attracting women to this particular sector. So in essence, when what Vodacom has done is we've got women in technology program, we've got women, ladies in waiting in essence, where we're literally going all out, because I think the skill set required for the mobile network of the future is no longer just purely engineering. So we're attracting women from the financial services, from the retail environments to start seeing us as a potential employer. We make sure that there's partnering with Gibbs, make sure that over the year there's a lot of interaction between our executives and the ladies in that program, so that in the event that they do decide to move, that Vodacom becomes their favorite destination. Risks, and excuse me. The key principal risks we face as a business for us are much more regulatory, spectrum, termination rates, and we have ongoing conversations with regulators and other policymakers around how we manage that. But for us our partnership with with Eskom is about some of our sites that are connected to the grid. When there's downtime for them, it affects us. If we move to diesel, we have to deal with the emissions elements, so it's literally making sure that there's uninterrupted. But where there is interruptions, we have a fallback. We're able to still continue and provide services, because a lot of, when you look at banks, security companies, a lot of our customers, big corporate customers, deliver a service to you as individuals, and all of it is reliant on a predictable call connection. Increased competition, and I think our market is, and I think there's Cell C, there's MTN, there's much appreciated competition, yes, does start to impact on price and offerings and then but when it's unregulated, it starts to affect the sustainability of the business going forward. And I think spectrum remains a key risk for us, because as newer and newer technologies become available, the work on, you need additional spectrum bandwidth, and right now there's the option of ICASA, whether you're going to go on auction, how do incumbents get access to the additional spectrum to continue the business operation. So that model. Ownership is one of the qualifying criteria. We're 65% owned by Vodafone. Does that mean we're excluded? Are we not? We're using the DTI codes, the Empowerment Charter. There's still a dislocation with some of those. So you want harmonization that ensures that sustainably people are able to play. If you offer licenses to emerging players, do they have the capital required to build up a network? Are the guys now going to approach the incumbents and have partnerships? But in that instance, you're literally creating billionaires without really having put any infrastructure on the ground, which is a challenge. But what we did, and this journey literally, I think 5 years back, we sat with the board to start thinking about sustainability issues. What are key material risks, key issues that are affecting the business? And and that involved how we internalize sustainability, thinking into our business strategy. But the more recent improvement on that is we identified 10, working with KPMG and other partners, 10 mega forces that will affect business enterprises going forward. And all of us, and any business enterprise, is variously affected by this. And I know you've got this. So literally when you look at energy, scarcity of resources, water, and all of these are elements that affect Vodacom. And what we tried to do was to say, where are we? If these are the key trends facing business and the sustainability of enterprises, how are we performing? How geared are we to make sure that our business continues to prosper? So this is literally how we're responding to it. So not only is network quality able to ensure that we attract and retain customers, but also builds on customer value. So innovation becomes a key issue for us. So the one way to also spur innovation, we've got an Innovate program where employees are invited to think of ideas, and for a prize of R1 million, you're able to still participate as part of just this Innovate program. Increasing penetration data, and I think if we're able to increase our coverage, coast to coast, voice, where you have data, you're still able to ensure that the bundle offers that we present you're able to experience them irrespective of location. So whether you're in Shawelo or in Guguletu, it's still the same experience that Tshepo would experience in the middle of Sandton. But all of it still requires capital investment. But also managing our environmental footprint, which is where we get guidance from Trish and the rest of the team around how do we ensure that, because all this coverage, all these services that we want to store, data, all of it requires that we have more base stations, but we've got to do it in a very smart way and leaving a minimal carbon footprint. Proactively engaging with our stakeholders, and for us it's about having ongoing conversations, and this is where I come in, literally with government, understanding their expectations, but also getting them to understand how this business operates, because a lot of people see us from one perspective. You make a lot of money, but they don't necessarily see what are the inputs that go into sustaining a network and some of the work we do. Giving them a sense of collaborations, partnership, and the appetite we have to deliver on social services. So the M-Health, M-Education initiatives, and the partnerships that we have with government are really geared towards ensuring that we're able to proactively partner. And I think that's it. But ours is a conversation that we continue to have on an ongoing basis with all our stakeholders. And in all of it is Vodacom remains committed to effective socioeconomic development while still ensuring a return to its providers of capital and shareholders. Thank you.
Thank you, Tshepo. I see we have a spring of a hand there, very eagerly awaiting a question.
Hi, my name's Amber Roth. I work for Athena Capital. We just heard a lot about Woolworths and them sort of monitoring their supply chains. I was wondering if Vodacom have any initiatives in place in terms of their supply chain of cell phones. I mean, you spoke about developing an affordable smartphone, and I mean, one of the big risks, and it's a human rights issue, is the Asian workers producing smartphones like Apple and Samsung and getting benzene poisoning. Have Vodacom thought about that at all? Do you have any initiatives in place?
So we are cognizant of it and engage, and this is where Vodafone comes in, because literally even from a procurement perspective, Vodafone procures and we're able to get into a shopping basket and see what's available. But through Vodafone, we've engaged. I mean, we've partnered with Huawei to start saying some of the products that you're branding as Vodafone, Vodacom, coming into our markets, these are some of the human rights conditions. So literally part of the procurement processes that Vodafone puts in place, the human rights requirement is put in place, and we're able to still have line of sight into some of those conditions. So as part of it, we do site visits to some of the locations that produce. But the bigger players, Samsung and the rest of the guys, it's an ongoing conversation just to ensure. But where we are able to, and I think we're fortunate that Vodafone is the world's #2 mobile network operator. So from any, there is gravitas when the guys come knocking, when they want to do, procure some of these handsets, Kika, coming out of, the East Asia zone. I mean, we're able to negotiate and ensure that there's some observance.
Hi, Ross from MSCI. I'm just interested in your comments on turnover and retention. You mentioned a R1 million prize. What are the other incentives that you've got going to make sure you keep the best people?
So we've invested a lot in making sure that not only is the working environment conducive, so the employee benefits, lifestyle benefits that are built in. So, and I know, when I say to a lot of the guys, so not only do you have a dentist on site, a salon, you've got a masseuse, a nurse, so some of those just to ensure that the working conditions are there. But, with our high-priced talent, short-term incentives are in place year on year, just to ensure that we retain, the attention of, our best equipped and best key talent. But I think the key one for us is ensuring that there's employee satisfaction. So we've got, the Innovate initiative for us is a short-term issue. But in the long term, not only is talent management taken serious, so each year, even after the business planning process, priorities have been set. It's literally up to each manager who's mandated. So it literally, the first 2 months of that financial year, you've got to make sure the performance agreement is in place. There's ongoing performance dialogue that literally talks to not only the employee needs around the additional skill sets required, so that's already mandatory. So that performance agreement will not be closed until there is, personal development built in, but also an agreement around how performance will be measured. So that's part of it. But also talent management, we invest quite a lot in opening up the door. So part of the Vodafone family, we've got a few colleagues that are either in Germany, Italy, or in the UK, but there's a lot of skills transfer, and so we get a lot of people moving. So we're literally, with some of our engineers, it's about mobility. If there's a new skill that you have that's required elsewhere in the Vodafone universe, we've got 6 month secondments and some intervals just to ensure people are able to move around and just gain new experiences. So that's, a glimpse of some of the internal processes that we put in place.
Yeah, Mike Davis. Growing trend in Africa, cell phone groups, is for the sale of towers to Helios, American Towers. A number of companies are operating their space, and I think Vodacom has done that in Tanzania, if I'm correct. But not. Is there a strategic decision around that in other markets in Africa? Is it going to be ad hoc? And in, say, the Tanzanian example, how do you then work with, say, Helios on that to ensure that once the sale's gone through, that they're still operating, maintaining energy efficiency targets or of your base stations that you then are operating on? Is there some way that you engage them on those sustainability factors that once you've handed them over type of
Okay.
things?
So I'll respond backwards. So in essence, with Helios, so the target that we've set for that operation around reduction, efficiency, literally is contracted into Helios. So they are literally the executor. So it's part of the service level agreement that we put in place. So we do monitor. So when Trish and the guys calculate, it's literally on those assets. And I think the logic which is what I was saying to the guys, rolling out network is capital intensive. So you've got to have the cash in the first instance. And I think when you look at Barty and some of the other companies that have looked at it, it's much more around the maturity of that market. So when guys are starting to see that competing on infrastructure, I think we come from a legacy where competing on infrastructure in the SA environment, and I think we're not necessarily stuck in it, but I think for us, because we've chosen to have our infrastructure as a differentiator, in the other markets it's not. So when guys are starting to add what the rollout costs, guys would rather compete on services, which is where that model comes in. So they're able to remove a lot of burden. If you reduce your capex, then you can just really worry about the operating expenditure and other things and really compete. Those are vibrant, markets, very competitive, but of a very low base. So, the rand and it's so cutthroat in most instances. So, but also what you also say is because network sharing, they've embraced it a lot more quicker. So there's no real concern around priority traffic and other issues that one would have concern with in sharing in this market. So in the SA environment, and I know I'm closing this one, Mike, just to say, I don't think in South Africa, there is network sharing, but I don't think we're at that point where selling or to tower companies will really come through in the South African setting.